What's up everyone, it's Scotty with MoneyVest. So you guys asked for a full technical analysis on a lot of these companies. I've been doing them for big techs over the weekend. Today's video is going to be on Sofi, Palantir, NIO, Square, and Shopify. We've only got 5 right now, so if you have more suggestions, more stocks you want me to cover in these very detailed technical analysis so you can plan your trades, if they're helpful for you, if they're useful, let me know in the comment section down below, and I'm happy to add a few more companies and stocks to this list of more speculative names that are more volatile, of course, compared to the big tech. I guess maybe that argument doesn't hold up as well because big techs have also been flying, and selling off like rock here, or dropping like rocks. But let me know in the comment section down below if there's any other stocks you want me to add to this list. As always, if you enjoy it, find it helpful, that's all I'm asking in return, is that you drop a like and subscribe to the channel if you haven't already. The links to our Discord and Patreon is going to be down below. 16% annual discount. And I also want to mention that we do have the sale for our educational courses. A lot of the technical analysis that I'm going over in this video, you can actually learn everything from start to finish. Literally beginner friendly videos, over 40-50 lectures with a lot of analysis and trading strategies that are going to be included in the technical analysis course. It's currently 50% off right now. Fundamentals 50% off, and options also 50% off, and the bundles 60% off if you want to take advantage of that. And the coupon code is going to be Halloween. So link's going to be down below. It's available for 2 more days. October 31st at midnight is when this expires. So let's get started. First thing I want to talk about is, trading against the trend and trading with the trend. Okay, the pros and cons of each. So when you're trading against the trend, what does that basically mean? That basically means that you are, let's say, going long on a trend which is showing clear signs of a downtrend, right? So in other words, it's making lower highs and lower lows, and you are going long regardless of where the trend is, right? Despite knowing the trend that it's in a downtrend, we're still going long. And, this could be reversal patterns. There's a lot of different types of patterns that kind of fit this criteria. A lot of them are, again, covered in the technical analysis courses. Reversal patterns. Now, the interesting thing with these types of patterns and these trading against the trend is that these are low probability trades, right? And when I mean low probability is because, look, trading is all a game of probabilities, right? It's a game of odds because nobody knows what's going to happen. I hate to break it to you. Technical analysis will never give you the answer 100% guaranteed. Okay, this is what's going to happen. No, it's always a game of probabilities and odds where you're trying to figure out, okay, I want to find asymmetry, right? Asymmetry meaning I want to find opportunities and setups that offer moderate to low risk with moderate to high rate of return. And there's the full math for risk and reward is already covered in the technical analysis course. And in that, I've also mentioned that you can be wrong more times and still end up making money if you are taking higher quality setups and you're looking for that asymmetry. Now, with trading against the trend, it is a low probability success trade because, like I said, it's trading against the trend. So the probability of it working out is low, but it also does offer the highest asymmetry because the risk is quite low compared to the potential reward because of that reversal that may or may not happen. There's not a lot of confirmation, right? So in other words, if we are trading against the trend, the stocks are falling and we're looking for that reversal, there may not be a lot of confirmation. But if you're waiting for that confirmation to happen, somewhat of that move has already taken place. So the risk reward shifts, right? It tells from being really good to somewhat good. And I'll go over some of the examples here. And there's also high invalidation risk because, of course, if there's a low probability of success, there's high invalidation risk because it's chances are that it breaks down below certain support and it makes that trade invalid. But it also does offer the best risk reward because, again, it's trading out of support. It's trading at a pretty low price already. So the risk is limited compared to the potential reward if it does see that reversal. Now, trading with the trend also has some pros and cons. So it is a higher probability setup, right? Because it's trading with the trend, right? The probability of it happening is much higher. It's got modest asymmetry. So as opposed to the reversal patterns, and trading with the trend could be like an uptrend, or it could be a bull flag breakout, or it could be a regular breakout. It could be an inverse head and shoulders. So there's a lot of, bullish patterns versus bearish patterns that, again, we have broken down in the technical analysis course, but it does offer a modest asymmetry because the risk reward may not be as attractive as something like trading against the trend or catching a reversal pattern. There is confirmation involved, right? Because if you do see a breakout, that's the confirmation that we're looking for to start going along. And there is low invalidation risk because, it's high probability of success, and it does offer decent risk and reward. So it's really, a game of trying to understand, okay, what is more important to you, right? Do you value higher probability setups, that are going to be more successful, but the profits are going to be base hits, or you're looking for low probability success, but when they are actually correct, when they are, when they do play out, the profit potential's, very, very high compared to the risk. So that's something that, again, it's going to be trader by trader. It's going to be based on your risk tolerance and your trading style and your strategies. But I just wanted to put it out there because not every setup is going to be the same, right? No two setups are going to be the same. They'll offer different risk reward setups. They'll offer different confirmations, different asymmetry, and different patterns, so to speak. So to give you a simple example, this is what, somewhat of a reversal pattern may look like. You may have an RSI or MACD that's oversold, showing signs of, very, very extreme selling pressure. But this is the trend, right? The trend is that it's been selling off, and it is a low probability success trade because even though it's been selling off, there's no way to know that the selling pressure is going to exhaust itself or it's going to start, consolidating sideways, and that reversal is going to happen. So this is a reversal pattern where, there's a low probability, highest asymmetry because the risk is low, right? If it does invalidate, basically breaks down below a certain support level, that's where the stop loss needs to be, and I can get out and look forward to the next setup. But the reward potential is really, really high, right? If you do see that reversal back up, considering, let's say the oversold RSI MACD and it starts to recover back up, there's going to be a higher level of reward for the limited amount of risk potential that this thing carries. Now, it's possible that it does break down, right? And that's where the invalidation happens, and that's when it's no longer valid. And then we'll be looking at the next support, and the next time it comes down to a reasonable area of demand and support where the buyers are going to potentially step in, and that's when the reversal trade pattern can be set up once again. Now, this right here, again, can be the new setup, right, after the breakdown happens. And that's exactly why it's so important to kind of respect your stop losses, right? If you have a stop loss in place, it's there for a reason. It's there to protect you from not getting caught up on the wrong side of the trade. And if you're trading, let's say, the reversal pattern, it's incredibly, I think it's for reversal patterns and catching, a low probability trade, it's even more important to validate and to respect your stop loss than it is to be trading with the trend. And if you are trading in an uptrend, because if you are looking to trade these types of setups, which is reversal patterns, and a breakdown happens, chances are it accelerates that sell-off further to that next support. And I think it's important to respect your stop losses very, very much, right? So don't take them lightly because they're to protect you, right? They're there for a reason, to protect you from further selling pressure. This right here, if you're waiting for that confirmation, so a little bit of, reversal that's already started to happen and the confirmation's there, maybe you're tracking a moving average, maybe you're looking at the MACD crossing over that signal line or the RSI, whatever it is, you'll notice that the risk reward isn't as appealing as something over here, right? Where the risk reward is much better because the stock already is starting to sell off. It's consolidating at that support versus over here, it's already made a move back higher. It's already starting to show signs of that reversal. So in our previous videos, we talked about Coca-Cola and Colgate, right? So Colgate had a very nice move back up. This was an example of that reversal pattern, right? I did a video a couple of weeks ago talking about this trade idea, rallied over 8.6%. Coca-Cola had a very nice move back higher as well. So you'll notice it came down to that support and moved back higher 7.3%. And Raytheon also with a very nice rally and recovery back up from $68, pushed up over 15%. So all three are good examples of a reversal pattern, right? And not all of them would always work out because, like I said, these are low probability trades because reversals are very hard to come by. They need to start pushing higher. So you can see the RSI was oversold, MACD was oversold, started pushing back up. Same thing with Colgate and Coca-Cola. So just wanted to kind of break this down first before I go over to the technical analysis. I know it's I'm going over these topics that are more educational, but hopefully they're helpful for you in your trading and you find them useful. But let me know in the comment section down below if you have any questions whatsoever. Okay. Starting with Sofi, and Sofi here has obviously been selling off more recently. This has been the entire sell-off, lower highs and lower lows right now. Support level is going to stay put at 651. And you'll notice that we did actually already see a little bit of that negative divergence, right? So this was the higher high with the RSI just making this lower high. So there was a negative divergence that was already forming for Sofi. And what you'll notice is now that it's starting to trade in this downtrending channel of lower highs and a lower low. So very, very important support level sitting roughly at 651 for Sofi. So this would be a very, very important support level to watch. And if it does come down to that level, there's a possibility that we do see a bounce back higher, i.e. potential for a reversal trade, and $7.91, $8 is going to be that next resistance level to watch. Now look, if you do break down below this, and like I said, reversals are somewhat low probability trades, if you do see a breakdown, then the next setup's going to be presenting itself at 415. And I know that's a pretty brutal support, but that's really where that next demand sits for Sofi. And I wanted to show you guys the monthly chart for these companies as well, because I think it's a lot cleaner and it also puts things in context. So this is the monthly chart for SoFi. You'll notice that it was in the symmetrical triangle over here before that breakdown happened, right over there. And since then, we obviously sold off and we found a very nice support at 420, closer to 415. That's exactly the support that I mentioned earlier. That's the support. Then it went back up, right, to retest what? This previous support level. This right here, previous support, now acting as a resistance. So you can see that very clearly, that the place where we got rejected, we validated in the past. So old support acting as a resistance, and now we're on our way back lower. So yes, there's a support right over here at 651. But if you do end up breaking down, then the next support is really going to be sitting right over here at 420, 425. Now, talking about Palantir, Palantirs also have had a very much of a roller coaster ride. So a lot of consolidation here, breaks down, consolidation, breaks down, consolidation, and then a very nice breakout. And then now it's starting to, again, make a little bit of a head and shoulders, as I mentioned earlier. And this could be just a little bit of an extended shoulder, which we haven't broken down below this neckline of 1375. This continues to be a very, very important level of support for Palantir. In case we see a breakdown below this, the next setup is going to be at 864. That's going to be that next support level to watch for Palantir. Although there may be some support here as well, which is going to be at 1050, right? That's going to be in line with this previous support level. We validated a couple times here, which obviously ended up being a resistance, and that would be that next support level to also watch for Palantir in the middle in case we see a breakdown below 1375. So again, that's going to be the level 1375 down to 1175 down to 864. Those are the three levels, really, really important levels to watch, and resistance stays put at $18. Rejected here, rejected here. And I think it's going to be a little bit more difficult, unfortunately, for Palantir to see, highs of 20s. So this right here, mid 20s, high 20s, I think it's going to be a little bit more difficult because fundamental risk is high. Valuation risk is really high because Palantir is probably going to do GAAP EPS of about 5 cents per share, and trading at $20, we're looking at, a P multiple of 400. So that's going to be quite insane, but that's also normal for companies that are now turning the corner towards profitability. So $18, very, very important resistance here. Near-term support at 1375 down to 1175 down to 864. Those right there are three support levels to watch for Palantir moving forward. And to give you a little bit of context here, for Palantir as well, this is the monthly chart. And once again, you'll notice that exactly where we are getting rejected. This right here, the $18 level, is in line with this previous support that Palantir validated for such a long time. I mean, this is a lot of months of consolidation sideways. This is monthly chart, right? So we're talking at least a year of consolidation before seeing a breakdown over here. This was the breakdown that took place and basically took Palantir all the way down to low $6. So very, very important support levels here. Right, and right now it's just consolidating sideways, getting rejected at that resistance. We got a massive support here. This is also lots of months of consolidation sideways at that level. In case we see a breakdown, well, then I think it's possible that it does head a little bit back lower. Now, talking about NIO, I don't even know where to begin because this has been just on a consistent downtrend of lower highs and lower lows. We did see a little bit of this falling wedge pattern, then had a huge breakout over 160%, and just as quickly as it went back up, it came right back down, back to that support of 730. And this is where we are. I mean, this is about as simple as it gets for NIO. This is the support level at close to $7.30, and that's exactly where we are sitting at the moment, pretty much close to that 52-week low. In case we see a breakdown, I think that's going to be, the next support really is going to be sitting right over here for NIO, and that's going to be in the $2 to $3 range. And this is the overall downtrend, right? This is the monthly chart. You can see lower highs and lower lows. Very, very important support level that it holds up this level, which again is going to be this 730, right? This is something that I've mentioned right here, the green rectangle. If it doesn't hold this level, then it's possible that, as we continue to trade in this downtrend, we break down and we make our way back to sub $3, sub $4. And that's, I know it's going to be pretty unfortunate, but that's really the whole pattern right now. And right now we're getting rejected at this level. So you'll notice that this is exactly where we kind of got rejected, and that's a support for NIO from the past. Validated, and then we got a huge breakdown, massive candle coming in, a consolidation sideways, moving back higher, getting rejected. So previous support acting as a resistance for NIO, and now we're back to that support at around 750, 744 levels for the company. So this level, it needs to hold at all cost. If it ends up breaking down, maybe there's one more support I can mark off. That's going to be this level right here. So you can see previous support acting as a resistance. So extended that out is going to be sitting roughly at $5. So that's going to be $5. over here, which is again previous support, resistance, potentially a support in case we see a breakdown. But this is the overall, downtrend, which definitely does look really weak for NIO. Now coming over to Square, and Square also has had lots of consolidation. So what you'll notice is consolidation sideways here, which on the monthly chart does seem like a bull flag, huge breakout, then selling pressure, consolidation sideways. So it basically consolidated at the same price, same range where it has consolidated before. In other words, this right here was the box, and this right here is the box, right? So basically twice, on the way up and on the way down, Square consolidated at the same exact prices between 50 and 90 bucks, right? This was before the pandemic. This was after the pandemic, just consolidating sideways in both areas, and now starting to break down even further. So you can see, lots of consolidation sideways in that range, time and time again, and then of course a huge breakdown. And this is a perfect example of a reversal trade, right? So just because it's validated in the past once, twice, 3 times doesn't mean it's going to validate every single time. This time we didn't quite see the move back higher. Instead, we saw a bigger breakdown for Square back lower. That's exactly why it's so important to respect the stop losses, because look what happened after the breakdown. It broke down over here, and that only accelerated further the sell-off for Square, and now we're sitting much lower than where we were at $50, right? Now we're sitting at sub 39. So that's why it's so important to respect the stop losses if you are trading a reversal pattern. It's more important to respect the stop loss on a reversal pattern than it is to be looking at from an uptrend, from a bull flag breakout. Of course, respect your stop losses regardless of the pattern, but I'm just saying the importance is more when you are looking at reversal patterns. Now, this is the overall monthly chart for Square. And again, you'll notice a very nice, pull, a little bit of a flag, and then a breakout for Square. Now, the exact opposites happen. So this right here is the pull, and then a lot of consolidation sideways, and then, of course, a breakdown that's happening at the moment. So we basically had a bull flag on the way up, and now we're seeing a bear flag on the way down. So a very important support now for Square is going to be 34.58. That's going to be in line with this level right here that it's validated in the past. So $37, $30 or $34, $35. That's going to be the level to watch for Square. So $33 is going to be that level. Now, talking about Shopify, Shopify has also been on a very nice uptrend, right? Up until it wasn't. So this right here was the uptrend. Got a breakdown over here. So basically, had a very significant sell-off in 2022, of course. And since then, I feel like it's been trading in this type of downtrend channel. So this is the lower highs and potentially the lower lows in a little bit of a falling wedge where obviously sold off, pushed right back up. It's now showing signs of some weakness again. So ideally, this would be the next support that's going to be sitting right, in line with this falling wedge. For Shopify, it did see a nice uptrend, a very, very small uptrend within the context of this broader falling wedge. And now more recently, it seems like, it's making some lower highs and some lower lows. So it's got a very, very tight range within which it's been trading. So a couple support levels that I would mark off on Shopify: previous resistance, lots of resistance there, massive support, and that's going to be sitting right over here. It's going to be 41.50 for Shopify, right? Very, very nice green, that rectangle. That's going to be that area of support, area of demand. And this right here is going to be that next level. So next level of support right over there. That's going to be the green rectangle. Once again, sitting roughly at 29.50. So we got 41.50 and 29.50 as 2 support levels to watch for Shopify. And that's all within the context of this broader falling wedge. So that's where we are with a lot of these stocks here. Let me know in the comment section down below. What do you think? Don't forget, coupon code Halloween available till October 31st, midnight, 50 to 60% off. You can learn everything about technical analysis, literally from scratch, beginner-friendly videos, over 40 lectures on the technical analysis course. Link's going to be down below. And as always, happy investing. I'll see you all in the next video.